Welcome to the SEAF model. I'm Jack Kosar. This is effective the week of May 12th, 2025. Let's get started. SEAF signals for this week. We hold communications and technologies from last week, and real estate gets replaced with utilities. Utilities coming in, really bringing its strength in from a strategic quarter, showing, not the highest scores here for the tactical month and the trading week. Real strength here is coming from communication services and technology. Technology still kind of shedding some of that low scores that it had in the strategic quarter, but we've seen that's coming down to 7. But really seeing some strength in the tactical month and the trading week. Communication services remain strong in 3 time periods with 3 or less, with total score of 8. Looking at consumer discretionary, getting a little bit held up by the strategic quarter, but showing some strength in the trading week. Overall, heading into our heat map, flows on the week were they were light. We were actually down. Flows were down last week by a very small margin, very close to 0. We did have 3 straight positive days for Wednesday, Thursday, and Friday in terms of flows. But not seeing a lot of giant movements. Technology was obviously, we could see here, 1 on the trading week in terms of flows, and that was only a 0.15% increase. For those who don't necessarily watch this video every week, 0.4 is significant in terms of how we're measuring the flows on a weekly basis. So only 0.15. So not anything crazy going here on the trading week. Like I said, overall flows were light. Healthcare coming in at the very bottom here with the trading week of 11. That was a negative 0.35%, so not even significant on the decline side of things. Again, overall, seeing a little bit of a mix. Nice to see communication services and technology lead as the market's been doing well over the last couple of days. And let's head into our rainbow charts. Communication services is our top sector this week. Overall, seeing a nice trend in terms of its SEAF score, and it continues this uptrend of the relative outperformance versus SPY. Taking a little bit of dip here on Thursday, but overall continue that uptrend. We are in that upper favored ranking, so as long as we can continue to see flows, I would like to see the strength of flows increase a little bit to really kind of push this relative outperformance a little bit higher. We're trading in a little bit of a box here, but overall, like I said, nice positive uptrend going back really the last 9 months. For communication services, and seeing a bit of strength here as we've pushed through into that upper favored. Technology remains up. We've been seeing a little bit of heart attack from technology the last year. So nice to see a little bit of sustained success up here. That is really coinciding with some strong relative outperformance versus SPY. We do have some looming resistance in the relative performance part of the chart coming up, but there is a bunch of room to run still. Technology looking relatively strong, and again being a little bit held back in terms of its overall score by its strategic quarter, but as that falls off, we'll actually see this should see a little bit of a higher ranking. Technology is already relatively highly ranked. Consumer discretionary, just wanted to kind of point this one out. Seeing some strength in the tactical month and the trading week. Again, flows weren't hyper strong to really push this thing into the next level, as you can see here on the relative performance versus SPY. But a little bit of extra push here. We can get up here into favored, potentially drop off that strategic order of 10, which is holding this back a little bit. Kind of good timing, though. We really want to start to see this relative outperformance part of the chart jump. Right now, we're trading a little bit of a range here, a little bit of a sideways range after a decline. So looking like we're establishing a bottom in the relative outperformance. Looking for some strong flows to kind of push this thing over the top. We also might see the strategic, like I said, see the strategic order start to roll off. We could see this jump up. But obviously, with the way things are coming out of Washington to consumer discretionary, if this market could rip forward, could really kind of drive through. But there is, discretionary spending is a little up in the air at the moment. Looking at our next one, industrials. Why don't I just point out industrials as it was fourth on the trading week, fourth in the tactical month, and ninth in the strategic quarter. I do like to see that kind of distribution when we're looking going from 9 to 4 to a little bit of a stronger 4. So we are seeing some nice relative outperformance for industrials. I would like to see these flows come in a little bit stronger to kind of push us up into favored. But overall, industrials is a kind of a place to watch. We're watching consumer discretionary and watching industrials right now. Not SEAF signals, but just interesting setups, not only in the SEAF scores, but in the relative performance thing. Obviously, we're testing resistance on the relative performance versus SPY chart here for industrials. Last thing I wanted to bring up, I like to show this every so often. So this is up top here. We have the sector spider total AUM. So if you were to take all 11 sector spiders, you would add up their AUM and plot that on a chart. That's what this would be. We're going back 2 years on this chart. I just wanted to kind of give a broad sense of the way we're looking at this. I have a 21-day moving average here and a 50-day moving average of the total AUMs. We recently have broken through on the 21-day moving average here, and we are very much close to approaching breaking through that 50-day. Again, not to project out what's going to happen in the future or do any predicting here, but good things tend to happen when we can break through both the 21-day and 50-day in terms of this total net assets chart. Down here below is just a chart of SPY. And good, like I said, when we cross through this 21-day and this 50-day up here on this total net assets chart, we do tend to have some good strength in the market. So looking for us to break here on this looming 50-day to really see that continued strength in the market that we've been seeing. So we broke through on that 21-day a week or two ago and have seen some nice positive momentum in the overall SPY. So, like I said, I like to bring out this chart both in good times and bad. As you can see here, when we broke down below the 50-day and the 21-day, we had a breakdown in the S&P 500 in general. We like to think that these assets under management are really, when managers are voting with their feet for the SEAF model. So, as you can see here, we're getting close. Nice positive trend here in SPY. Which is telling me things are looking up. So as long as we can continue this momentum, kind of tracking back over to that 300 million mark, good things are happening in SPY. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week.